Good morning, everyone. Thanks for joining us today. Welcome to the NWR Security Technology Virtual Investor Conference. On the call today, we've got Intelligent Monitoring Group MD, Dennison Hambling. I'll pass you across in a moment to Dennison to kick off our discussion of IMG. We'll have a presentation from Dennison today, followed by an opportunity for Q&A. If you'd like to ask a question during the call, please type it into the Q&A panel in the Zoom app. So to kick things off, I'll hand over now to Intelligent Monitoring Group MD, Dennison Hambling. Go ahead, Dennison.
Great, thank you, Tim, and welcome everybody. I'll go through a preso fairly quickly today and hope to get some good Q&A towards the end. So for those that aren't familiar with us, IMG's the leading provider, or a leading provider of security and security-related services in Australia. The heritage of the business and the heart of the business is our monitoring operating centres. We have 4 of those across Australasia, and we look after about 210,000 customers, slightly more commercial than residential. Often people sort of think of us as resi, but we're actually a little more commercial than resi. What that means is underpinning this business is a very stable revenue base of people paying monthly, quarterly and annually to have their businesses or persons or houses monitored. Behind all that is about 530 full-time people across Australasia. We have a pretty good mix of staff. We're very keen on making sure we have a broad spectrum of folk in the business to drive us forward. Share market value, we're through $150 million now, and we had one principal supporter through this journey, backed with a lot of very helpful folk. About Black Crane has 47% of the register today, coming down as they haven't participated in the most recent raise. Peter Keenan, who's the chairman of our business, is the fund manager behind Black Crane. In terms of scope and scale, delivering these services, we are right across Australasia. So I say from the top of Cape York to the bottom of Stewart Island, New Zealand. I'm an Australian and New Zealand citizen. I sit in the middle of the Tasman on all things, albeit I do support the Wallabies. And so we've got a business that has a lot of span, and that's part of the success and part of one of the critical success factors for us moving forward. In terms of what that actually looks like, we're actually, notwithstanding, as we'll talk about the extent to which we've moved this business, we're actually a pretty simple and clear business. Effectively, we've got 3 brands broken into 4 reporting businesses. ADT Australia, Signature Security in Australia, IMG Connect, which is really the monitoring business, our heritage business, and then ADT New Zealand, which is a full business. In terms of balance, Australia makes up about 81% of our current EBITDA, with New Zealand about 19%. In terms of the businesses and what they do, ADT is typically more commercial, SME, and then to resi focused, albeit the name ADT, from things like Home Alone and lots of global exposure. ADT is a global brand. It's a Monopoly Brands member. We own the rights to use the brand in Australasia into perpetuity, a little bit like being a McDonald's franchise. We can do whatever we want with it, provided it's security related. Signature is a little more resi, SME focused, and then IMG Connect is really our wholesale business, where we support about 40% of the independent security companies in Australia with their monitoring part of their overall service. And as I say, ADT New Zealand is everything, has monitoring operations through to commercial. In terms of our business, how we end up, I guess, here today, it's had a couple of phases in its life. Effectively, it was a reverse takeover listing in 2015. A couple of businesses were backed in then and then built upon through to 2020. Peter Keenan and I joined the board in January 2020. It had shortly before that done its largest acquisition, which was a doubling acquisition with debt that proved to be quite troublesome. It was not an easy business to integrate, and when we joined the board, we found the business had not largely been integrated at all. So we walked into a business with about 5 control rooms. I counted about 3 chief operating officers and a whole lot of work to do. We got about doing the work. So for us, albeit there's 4 phases here, there's really been 3 phases for us. The first has been the digging in phase. So we dug in and got the business right shaped into 2 control rooms with some scale in each of those rooms. Certainly scale from an Australasian point of view, arguably still very small relative to global scale. Got the business making operating cash flow. We had to partially refinance it, partially recapitalize it, stabilize it, and then put together a strategy. We then moved into the next phases, which were really around growth. ADT was something that came to us that we decided to do, which gave us arms and legs. So we moved out of the control room or the security operating centers into delivering a full service across the value chain through to today, where really that work is all been built upon so that we are able to accelerate and are very, very much now focused on growth and scaling up. The key thing about that recovering phase is the lessons and the crafting that we took there were around integration. And we did there were a lot of hard days there of work inside the business, trying to bring the business together onto a new platform. And so whilst we weren't in great shape, we did actually make some really difficult at the time investments and expensive investments at the time into a new modern platform, so that our principal operating centers, or at least our oldest ones today, are operating on the best sort of global platforms available, which allow us to now unlock growth. So what does that mean? Just to really step back, we're trying to be the leading professional security and security-related services business in Australasia. Our view was that position wasn't occupied and isn't occupied by anybody. There are a few businesses that are bigger than us today, and maybe not so much in residential, where we're probably about the biggest, certainly in commercial security services, but I don't class them as anything like an industry leader like we would see in other industries. There's no Woolies, Coles type scenario here, no Qantas, Jetstar, Virgin, etc. And I think this is a professional service that where scale can have a really positive impact for customers and for the economics. And so our goal is really, really simple and really, really clear. We want to be the leading professional player, and to do that we need to really put in place proper professional ways of being and interacting. Whilst there are a couple of global players and have been a couple of global players and a couple of long-standing players, largely this industry is small business, and it's small business that has orientated off a trade or off a technical base. And so whilst the skill base is quite high and short in supply too, given the amount of demand, I wouldn't class it as presenting in a professional manner. And what we find, or what I found in this journey, having not come from security, is that a professional approach, a one-stop shop with proper planning and resourcing and EH&S type processes is actually really valuable. And so that's what we're trying to do, and we're going to do that by by being incredibly professional, but also being technology agnostic and just being open to using the latest technology possible. So again, just to clarify, simplify, so IMG today, really there's 3 key customer areas inside IMG. There's the commercial market, and commercial in our language and our focus at the moment is really commercial enterprise. So you were talking about the really large companies from Wesfarmers, BHP, Anglo, pick a large name, that they would be the target kind of customers we'd be looking to work with to provide integrated systems. And at that level of business, what you really are is a technology company with a service focus. You're using a security focus, sorry. You're using security as the required service that can then be stepped through an organization. So it typically starts with physical security, and it can reach into things like cybersecurity and a whole lot of stuff. And the technology platforms exist today to do that. And they're not being used particularly heavily in terms of what they can do. And there's a lot of demand and interest in them. Residential, we all know what a home looks like. Effectively, that has been a pretty dead market in Australasia now for 10 or 15 years. We want to bring that to life using latest technology. And then ADT Care, which is, as will happen to each and every one of us on this call, we will get older. And if we want to stay in our homes longer without going into a facility, if we're able, our families and maybe even ourselves will want to start to be monitored at various points of our journey. That is a market that's growing at that essentially that population growth rate, but technology is able to do a lot more there. And I note that I think Graham's at Telus is talking today. He'll talk a lot more directly about that market, and they're a partner of ours. So three clear markets with commercial. To be clear, for us, ADT was once one of the great held names in the commercial industry in Australasia. Its prior owners, who had been through several changes themselves, elected to try to do some portfolio mix shifting, which didn't work, which entailed ADT actually exiting that market. When we took ADT over, it was doing about 2 million of revenue. At its height, it was doing 130 plus million of revenue in 2012, 2013. It's very highly regarded even still today in that market by customers that have been around that length of time. And so all we're really doing is bringing that business back to life. The demand is there. The memory is there of what's been done. Even the people inside our business are there too. The processes are there. The systems are there. Really what we've got to do though is just scale that up a little carefully in terms of making sure we don't create potholes in the profile. But there's the opportunity to really scale that. We see that as a couple of $2 billion market easily, with no one player I can see that would have more than probably $300 to $400 million of revenue, and then it tails down very quickly. Post the acquisitions we made last couple of weeks, we're run rating about $40 million today. So we're still very early in that journey. I always say to people, you can have thoughts about the rest of the journey. I think the time profiles of each of these three customer sectors will be different in terms of when they kick in for us to take us further. The commercial business, though, is the most live today, and that the demand is there, the opportunities there, the memories there, everything's there. It's really about delivery and stepping cautiously through that so that we can build. And if we just do that, we can double the size of the group today. Residential market story there is really around, quite drastically really lowering the upfront cost of a security service to a house. At the moment, you can go to Bunnings and buy a product, which is a camera, and buy an Arlo camera, whatever you like, but that's just the product, and it goes through to your phone. We're actually providing a service, so you call us up, we give you advice, and then we can install it for you if you want, but also now with the latest technology, you can do it yourself to take some of the cost out, and then we can monitor that for relatively small additional fees per month, if you like. And globally, that approach that we're now applying has markets at about 30% penetration of houses being monitored. In Australasia, it's currently less than 5%. Today, really, unless you have an incredibly valuable house, and probably an insurer that's pushing you this way, you probably don't have monitored security. And if you do have monitored security, it's the system you probably have in place is a pretty sophisticated, almost commercial grade system, not a much more user-friendly system. And so there's a bridge there to be done. That penetration story, though, I think will take some time to kick in. We have more inbound leads than we can deal with, but they're relatively small in the sense of drastically changing the growth profile of our business today. But I think as the product and service that we are offering gets to market, people start to hear about it, see it, and I encourage you all, if you're interested, to have a look on our website and have a look at the CyberSense system. It's under the branding ADT Home Secure. Then you'll start to love it. I myself was not a security monitoring person. I'm on my third version of CyberSense in my third house. I've moved a couple of times recently, and I totally see it. I see my kids interact with it. I see how it becomes part of your life and how it will get in place. Final market, ADT Care. That, as I say, is there today. People are increasingly needing help in their homes. We're increasingly short nurses and qualified staff, technology, sensors, getting information out of residences and also, care facilities too, is going to be probably the best way to bridge that supply, demand, and balance. We are the monitoring platform. Our brand is strong. We're small in Australia. We're actually quite large in New Zealand. We're a third of our business in New Zealand ADT is actually in the care space already. It's a slightly different business model than the straight security model in that it's more of a leasing model. So it does take a little bit of capex, which we may get to quickly. But the growth is there and the returns are very good. And so that to me is really a business of the future. And, if you take that through to where it can go and become a leader, you obviously have a substantial business. And then the final bit is our historic, but I just make the point, we still look after 40% of the independent security services market. That's a really important customer base to us. They're also where, particularly from an M&A strategy point of view, if we find things that are of value, both ACG and Alarm Assets Group that we've just acquired are customers or were customers of IMG, IMS, Intelligent Monitoring Solutions. So, it's a good place for us. We're really proud of that business. So it's recently become the Australasian partner of Life360. All that work in Australasia with the new tiering of product that Life360 has been offering is because we have they've finally found a partner in Australasia with a platform that can work with them on that, which we are. And so that's starting to put some life, some good life into that. And it's very indicative of the use and increasing use of technology we can bring in our monitoring platforms. I thought I'd just quickly go through the P&L just to give a bit of shape and scope for people. We're essentially a sort of $30 million pro forma EBITDA business prior to the acquisitions we've just made. Putting those together, we're just on or under a sub sort of $40 million EBITDA business. The businesses we bought were fabulous quality. They've got long-standing customers. They're service providers with AAA type customer base, NextDC, Qantas, Sydney Airport, Services Australia, Westpac Bank as commercial buildings. And so they have been a fabulous addition to us and allowing us to scale up with quality and a quality workforce back that ADT business. I make the point just around our 24 year. For 24, we were just really focused on delivering earnings as one as always, but we didn't spend a lot of time explaining like what was going on under the hood, but really just set the mark to meet. In reality, 24 was an incredibly challenging year internally for the business because in Australia, we've been navigating the 3G to 4G transition, which has taken up an awful lot of internal operational capacity and has cost us, frankly, more money than we thought when we bought ADT, which has weighed on short-term capex. I guess the good side of that is as we move into 25 as a business, with a high quality book of business, with the business we've brought together, we feel really good about being essentially feeling a bit freed up to really be able to start to go after some of the opportunities that we see. So, we feel like it's a really good base for us to be working off. And just notably, we've got a lot of tax shields. The story, as I say, with the sort of turnaround nature of what Peter and I walked into has left us with a lot of tax losses, which is going to be helpful as we step into this next phase of the business where we are actually generating some good profit. So balance sheet, the really notable thing about the balance sheet that everyone focuses on is the debt. Debt itself is no problem. $80 million of gross debt with a 40 million type EBITDA business for this industry is actually probably globally considered under-leveraged. We're certainly not looking to leverage this business. If anything, we'll continue to drift that down, but it doesn't represent a problem. The notable feature of the debt, though, is that it's very expensive at about 15% full freight, so 10% cash, 5% payment in kind onto the P&L. The reason for that is when we did the ADT deal, we got an incredibly good price. And there are a number of reasons for that, which we can trespass if people require, but we had to have cash certainty and we weren't able to go to the equity market by virtue of the deal we'd struck with them to do it. So we had to go to the debt market and we effectively ended up paying equity-like returns in the short term to get the incredible price that we were able to get for ADT. Now that we're through that phase, clearly the next step is to get onto more senior type facility. I note that we've got a minimum interest payment to our existing debt holders through to February 24. But for this business, the next major mark in its journey will be to get to senior, to allow more of that sort of operating cash flow to go through to the bottom line, which we will look to do. I'll skip through quickly. Finally, cash flow. Look, it is a strong cash flow generating business. As I say, the dynamics are clear and there. It hasn't been yet fully seen for a number of reasons, one of which is we bought ADT in this financial year. There are a lot of costs related to that. We refinanced this year. We've been supporting a transition off JCI's, the prior ADT owners' systems onto ours, which we're largely complete. That required a double handling of costs. We had to pay them for the services while we're also building our own staff base. So there were abnormals which come out essentially largely are all out now, but if not shortly, therefore into 2025. Through that transition, we didn't have good working capital control. We didn't have good transparency of our own working capital for some time. That did, on the back of also a cyber attack for JCI, which distracted them for a short period as well, meant our receivables did lift more than normal, which we are in the process of now getting on top of and bringing back. And then the final piece is just the CapEx, and the 3G CapEx was larger, had a larger impact on us than we actually had anticipated. There was more pre-commitment to people in place than we expected when we took over the business, which we needed to see through. The good news is that it's effectively one time, and we go back to being a relatively low CapEx business post 3G. The one thing I do need to say though is we do have to go through 3G in New Zealand, and so the New Zealand business probably won't generate much free cash flow this financial year, being 2025, but it is a relatively small part of the business. The rest of the business, and particularly with the businesses we've bought, which are very cash generative, we really will start to see that cash start to really build into this business, which will be great. So very quickly, 24, I think the danger is if you look back at our business to try to understand, you go, wow, that's been a lot. And I guess that is true. We are an incredibly focused business. The only reason I think you'd have somebody like me running a business like this is because, I'm a pretty focused individual. So we've done a lot. We acquired ADT. The first thing we did post that was separate ADT Australia and ADT New Zealand, two separate businesses. They were kind of intermingled in a way that wasn't good for either. We have transitioned off the JCI systems. That was the reason we got this business and got it so cheaply, is JCI recognised we were the best people able to do that of the acquirers they were talking to, and they had 4 people putting bids down for ADT, and they actually reached out to us to do this. We refinanced our debt, raised equity twice. We acquired Adiva, which was an outsourced partner of ours already. And with that, though, we've effectively bought them in-house and bought back the name Signature Security, which has been really exciting for us in the industry, frankly. Probably the most singularly exciting thing we've actually done this year that's had the most positive goodwill. We acquired Securely New Zealand, some security lines there quickly after buying ADT, and that team had fully integrated those, and they're a part of the business. And then we've just recently acquired ACG and Alarm Assets. And then importantly, whilst at the same time, delivering to our initial commitment on profit, and also upgrading that as we've got towards the back end of the year. So in 2025, it's fairly straightforward to us. We're looking to become the leading service provider. For us, having a national coverage of installers is really valuable. We now really have that with ACG and AAG. We can, of course, always supplement that where and if it makes sense. We are able to hire ourselves. We have been attracting good people. We are seen as a really interesting, option, I think, for people coming who are senior and working in this industry, and they can see our desire to move forward. We can offer, we're really focusing on driving video and offering higher value services across our business and also across the industry itself. We've got 4 security operating centres, 2 of which are on the most modern platform, or equal most modern platform in this market. which can do that. We're very focused on our supplier relationships and being a good supplier, and actually, and also being open to, what is out there technologically, and making sure Australia doesn't fall behind. My sense was it has been behind, and we're here to remedy that. We are focused on simplifying our business. The ADT journey was a business simplification exercise, not a synergy integration exercise. We've come a long, long way there, but we're still working on that. And we still have been, for customers at times, a difficult business to interact with. We are very quickly reducing those barriers. Focused on 25 and refinancing our debt. Obviously, as I said, that's the key, probably strategic next milestone for the business. I'm quite confident about that. I have had inbound approaches from senior banks. We had a lot of interest in us even when we did ADT. It was just the nature of the facility we had to get. So we will work through that and look forward to that. And of course, we'll stay flexible. We're not people that rule anything in or out. As we've gone on this journey, there have been more, more interested parties in us and in offering opportunities to us. My observation of that is the quality of those conversations, and I can say that certainly with ACG and AAG, you can see the quality of those businesses has gone up and up and up. And so we'll stay open and alert to that, but it's not something that we have to do. We have a platform today which we think puts us in a really good shape into the conditions and the environment that we have. Tim, I'll pause there. I think that's a pretty reasonable quick overview, and hopefully I haven't overstepped the mark on time.
No, that's good, Dennis, and really appreciate the level of detail. And it's clear that you've done a power of work to get the business to where it is now. There's a lot of different pieces for us to unpack there. So it's been nice that our attendees have been putting some questions through, which we've got time for a few of. So I'll dive straight in there. So we've had one investor asking if you can give some detail on what the go-to-market plan is for commercial customers. They're wanting to see if you can expand on what the typical sales cycle looks like, what contract value looks like. Is there a recurring component, and can you give us any detail on the margins involved there?
Yep, sure. No, sure. So look, I think it's a market where there's a lot of tender activity. It's not really where we play. Our reputation. I'll step back. When ADT exited commercial, it exited the service of those existing customers and sort of the upgrades and installation work and all that sort of thing. What they didn't do, though, is really exit the monitoring of a lot of it. And so we actually have a bit of a pool of business today that is already or still is associated with ADT. Now, some of them may have feelings about that journey still, but we actually are still seen as a quality monitoring partner. So it's really going back to a lot of historic relationships and saying, hey, look, we're back and we're really sorry. It clearly wasn't us, and we all think it was a stupid decision, but the quality of the work, we have a network, we're rebuilding it. And so in terms of the sales cycle, it's really reaching out and discussing with people that when I say we, not myself, but as a business, we sort of largely know. And the feedback is, and I can think of one really, really large customer that would do, millions and millions of dollars of work a year. Their feedback was, look, we want to use you, we're happy to use you, but we just want to see that it's your own people. And so for them, a key milestone was actually getting our own network in place, which is what's driven us to make, say, particularly the ACG and AAG acquisitions. And look, and I don't have anything on the table today, but it may drive us to do more still yet, subject to what we find in the quality and holes in the network and what our customers actually are looking for. So I'm not sure if that really answers the thing. So it's ongoing conversations with people we know about work they've got coming up. I sense there's a bit of a replacement type cycle feeling going on too. I think people are spending, well, certainly security is of front of mind for people, firstly, and that's across the business, at all parts of the business. Secondly, technology sort of feels like we're going through some steps at the moment, whether that's cloud, whether that's use of cameras, use of AI. There's a whole lot of different and new conversations going on from existing people. And so, as I say, I say to people, and I don't mean to be cute or flippant about it because you don't want to take it for granted, but demand doesn't feel like our problem. In terms of sales cycle, it really depends. It sort of feels a little like you have your sort of financial year-end type decisions. So, some people like to go early, spend a bunch of money before June 30, certainly governments. Some people, it gets a bit tight towards the end of the year. Not sure if we can do that. We'll defer for a while. So there's a bit of mix and that sort of thing. The sales cycle sort of just depends on what they're looking for and how much they can afford and over what time. Because some of these projects, to answer the question about size, typical job at the moment, we've been aiming for sort of $300,000 to $500,000 jobs as we've been rebuilding the business, and we did that because we didn't want to go and take on multi-million-dollar jobs. You can get. Well, we have one customer in our book today who wants to do a complete system upgrade that if they did that in one hit would be $30 million. All right, so they're not going to do that in one hit. It'll probably be phased over a number of years. But we didn't want to do that up front because we didn't want to hire a whole lot of techs, get really keyed up on 1 or 2 or 3 jobs, and then find them tail off and find we're carrying people. We want to be a reliable and stable employer for highly skilled people as well. So we've been building the book carefully. But as we now get to this scale, that sort of $40 million, we are able to entertain, larger conversations. And as I say, we are in various stages of discussions. They will not necessarily translate into big announcements, from our side or anything like that, but will have long tail effects. The really important thing about commercial is, so typically to answer one question, if you do a complete system start, let's say you're going, okay, we're going to rip everything out, we're going to put a new access control security system and then probably into your organization system. So by that, I mean integrate into maybe your HR systems, your payroll, check on contractors, check the employees who work for you are the ones that are turning up. There's a whole lot of stuff you can do at Technology Day. That let's say that costs you $1 million. Every year, you'll probably spend $200,000 a year just maintaining that system. And because the systems are 24 hours a day, 365-day a year operating systems, they do cost you a bit of money to run, but they obviously bring you a lot of benefit and value too. That's the nature of the business. I always say to people, and what I liked about it was, when we look back at that, unique situation of ADT essentially winding down in the past, we saw the difficulty they had getting rid of customers. It was actually a situation where some of their large customers took them to court because they didn't think they could break their contract and stop doing the work. So, once you have a quality customer, if you do a good job, they are long-term. We have customers across our business. So with ACG and AAG that are 10 to 20-year customers.
That's good. Well, no, that's a very comprehensive answer, Dennison. And there's so many different dimensions, which clearly you've got a really solid handle on, which is great. We've got time probably just for 1 or 2 more short ones. One of the things you touched on just then, Dennison, as it relates to how you partner with other players in the space, and I guess to some extent your own R&D development cycle, the concept of using artificial intelligence to enhance your systems. So the question investors asked is, are you looking at any AI video solutions to enhance your remote monitoring of surveillance cameras?
Yeah. No, and look, we are and we do. So we are today and we do. Whether we've pushed them out to market deeply yet or not it's probably a question for the market itself, not us. I mean, we're certainly trying to raise these and put them forward through our distribution, through our wholesale business. And that is the future for us. We are a service provider, so we're not actually looking to build platforms ourselves. My observation of a lot of this stuff. So the danger, if I look at this industry in the past and why it, I think, essentially fell behind here, was the large players and the global players actually backed in their own product suites, and then they got stuck on them. And so therefore, as the world moved on, they didn't, and then they didn't want to spend the money to continue to move on. And I think that the security industry is littered of different parts of the industry that are like that. Somebody creates a great little thing for the moment that makes a good bit of money, and then when it changes, they don't really want to spend the money. They get sort of what an analyst used to call it fat, dumb, and happy. And so for us, we are the trusted service provider counterparty to both industry and to direct customers in the ADT cases. We are absolutely using AI. We need to use a lot of AI around video because it's very intensive if you just allow raw video into your operating centers. That's a lot of data and that's a lot of information. And so for us to be efficient and good at it, you use AI, which others do offshore. So yeah, it's absolutely a feature of what we do, what we're doing, and what the future is.
That's exciting. Unfortunately, we're out of time. So wrap things up there. So on behalf of the company, I'd really like to thank everyone for tuning in to the NWR Security Tech Conference today. We appreciate everyone joining us and for your continued interest in IMB. If you've got a question that we didn't answer today, and I know there are a couple of them we haven't managed to get to, please reach out and management will be happy to discuss that further offline. And we will make the recording of this session available online at the NWR YouTube channel. Really looking forward to the opportunity to talk to you all again. And Dennison, I might pass across to you now for any closing comments.
Yeah, no, look, thanks, Tim. I'll just say thank you to you and NWR for organising this. I would make a comment for the industry. I mean, this is an industry of today. I think security has been a fairly flat and sort of boring industry, and a cottage industry in Australasia. I think there's a number of elements to it, which I think people look at us and we're starting to try to unwind and explain to people. But it is a valuable industry. It's an industry in demand, and it's really around delivery and scaling that matters. So you've got some great sort of people today that we interact with as well through our business. And thank you for making the time and effort to put it together.
Excellent. Thanks, Dennison. Thanks, everyone. Chat to you again soon. Cheers.
Okay, bye.